Hi, everyone. I am Jeanette Mulvey, the content director of CO, which, if you don't know, is a publication for small businesses from the U.S. Chamber. This event, this panel today is about building your financial team, and that's what we're going to be talking about. The idea is that we want to talk to you about how to create your own financial success by surrounding yourself with a team of people who can help guide you and do just that. So we have a great panel that we're going to interview, and then we're going to take your questions for them. But before we do that, I have just a few housekeeping notes. The first is that later we're going to ask for your questions. So you can type them at any time you want in that window on the right-hand side of your screen. And later when I ask for questions, you could also just ask one directly by raising your hand with the little hand icon, and I will call on you, at which point you will turn on your camera and unmute yourself to ask the question. So that's the first thing. The second thing is, if you're using Teams, there's a couple different versions of Teams. So with the older version, you will have to hover your mouse over the center of your screen to access the menu bar. In the newer versions, the menu bar is at the top of your screen, and that's where you can mute and unmute and turn on and off your camera. You are all currently muted. So if I do call on you, just remember to unmute and you can use the chat. So with that, I would like to introduce our panel. It is my pleasure to introduce you to Hasan Mannan, who is Northeast Business Banking Region Manager for Chase. Hi, Hasan.
Good afternoon to you all.
Hi.
Glad to be here.
Hi. And Sarah Jennings, who is Principal Accounting and Outsourced Solutions and Director of Strategic Initiatives and Community Engagement for Mannan Costerisan. Hi, Sarah.
Hi, thanks for having me.
Did I pronounce it correctly?
You are pretty darn close, Costerisan.
Okay, thank you. And Stephanie Sims, who is founder of Finance Ability. Stephanie, thank you for having the easiest title and
Of course, my pleasure to be here, Jeanette. Thanks so much.
Thanks, you guys. So Hasan, I'm going to start with you. What are business owners asking you guys for right now? And, you know, what are you wishing they would be asking you for more?
Sure, that's a really good question. So, you know, as business owners, they're not always shopping for a new bank. It doesn't happen. You just don't walk down and like, oh, I'm gonna, switch over to a new bank for new services. That doesn't really happen. So most of the time, what happens is there's a pain point, and usually a client is looking for either a product or a service that they need to fill their gap. So majority of the time, that's usually what perks up some interest in clients. What I wish they would be really thinking more is how to be forward thinking. So this is how I operate my business today. What bank allows me the tools and the advice to take my business to the next level? So usually that would start not with products and services, but rather a relationship. And then on top of that, you layer the products and the services and how comfortable you are, what kind of bank you want to be with, a community bank that may suit your needs, or a national bank with a community service may suit your need. So it's really understanding what does a bank bring to the table, and can they be a long-term partner for you rather than solving for a gap that maybe that you're seeing in your business.
Right. So you would like to see the relationship happen before the problems start.
100%.
Yeah.
I believe we can all agree on that.
Yeah. Thank you. So Sarah, coming to you. First, just tell us about your company, what your company does, and then I'll ask you my question.
Perfect. Thank you. Yeah, Mannan Costerisan could be all sorts of things. We are a public accounting firm, and we also have a technology arm as well as an association solution. So our primary departments, technology we sell and support software, also integration things, virtual platforms, things like that, accounting, traditional audit and tax work. We also do accounting and outsource solutions, which I think we'll have an opportunity to talk about in a little bit. And then with the association side, we really leverage what we do internally and help nonprofit organizations and other community organizations to make sure that they're getting messaging, platform, technology needs as accessible as they can.
Great. So now my second question is, just what are you hearing from your small business clients right now in this environment, in this time, in the pandemic? What are their biggest challenges?
So it's a really big answer, I think. So the biggest challenge I'm hearing is we have a lot of clients, small businesses that are really, or had been really used to being able to predict the future to some extent. They knew their cycles, they knew their business trends, their cash flow trends, and now everything is up in the air. So it's really, it's like their biggest challenge is they don't have that crystal ball that they felt like they used to have. They didn't have it before, but we've never seen a climate like this where they've had to try really hard to either pivot their organization, look at new programs, look at new models, or deal with whatever legislative governmental regulations were being impressed upon them, their employees, and their patrons, their customers. So what we're really trying to help them do is to be completely honest and open. Call us early, similar to what Hasan was saying, but we have the relationship, build the relationship. Don't call us and we don't call you with historical information. We want to talk to you about what you're seeing, what trends there are. One of the things that we think that is really, really valuable is to talk to their peers. So looking at industry by industry, it's competitive, but you also can learn a lot because all ships rise, right? So we want to make sure that we're looking at the trends across industries and we're helping them do projections, do budgets, which a lot of our clients don't like the big B word, the budget word. That's not something that is natural to them, that they're comfortable talking about. But we do help them kind of plan a little bit better and document what they think's going to happen over the next quarter, over the next 6 months, over the next year and 18 months. That goes for their revenue streams, their expenses, as well as their cash flow. Because right now, again, there are so many things that are uncertain to small businesses, and all of them are different. It's really difficult for them to say if they're going to be able to pay for, to be able to fund payroll, even in some cases.
So you just said something that I think is very interesting, which this panel is about building a financial team around yourself. So we think of that a lot, about just having good people to give you good advice. But you said something that I think is really valuable, which is that one of the benefits of having a team of financial advisors around you is that they are learning from all of the other clients that they're doing business with. So they are able to share information and learnings with you that you would never have access to if you were trying to do it all on your own. And Hasan, I see you nodding. So after we talk to Stephanie, I'm going to talk to you about that as well. So Stephanie, tell us a little bit about you, your business, and what you're hearing from customers right now.
Yeah, so I was nodding along too, because I do think that this focus on trying to have a forward-looking approach to the uncertainty that we're all facing has been one of the biggest challenges I've seen people encounter. What I do is I actually work with small businesses and early stage entrepreneurs to help them find the money that they need to survive and then thrive. And in this environment, that's been really challenging because a lot of the traditional sources of capital, while some of them were open, we saw a lot coming through the PPP and some of the traditional lending programs. A lot of other sources that people had counted on in the past, including some types of venture capital and some angel investment, have been constrained. And then to the kind of K-shaped concept, some of them have been constrained, and some of them have actually gone into overdrive. And so as I'm talking to companies who are looking at what the next step is, quite often I'm focusing on some of the same things that we've already heard. What does the next 6 months look like? How do you plan for that? And ultimately, what are some small experiments that you could run right now that are going to help you at least understand if this new path that you're trying is going to be successful for you? Because if you've known what's worked and now you have to try something new, quite often it's like, I just want to take this big chunk of investment that I'm used to doing, and I want to move it into something new that I know is going to work. But quite often that doesn't really help you because you don't know if that new thing's going to work, and you could end up burning through those precious cash reserves much too quickly if you're not doing a little bit more small experimentation and rapid iteration.
So you mentioned doing experiments, which I think is probably a scary word for small businesses, but in this environment necessary. Can you just talk a little bit about conducting experiments or trying new things, I think is what you're saying, but from a financial perspective, like about how can you do that, but like not do it in a way that's a huge investment?
That's so smart. And I encourage people, for example, if they're trying new channels, right? A lot of times one of the challenges people are facing is that they can't reach their clients in the same way that they were able to before, right? So they're having to try new sales channels or new marketing channels. Instead of shifting 100% of your marketing budget to a new channel, just shift one campaign. Just create for yourself one campaign using some things you already know work, but run that campaign on the new channel and just be really honest with yourself about what the results are. You know, my old channel perhaps got me 100 good prospects. By making that same investment in this new channel, do I get more or less? And how can I tweak that so that I'm getting about the same return on the investment that I used to be making in this new channel?
Yeah. Okay, great. So I think that's really good advice. Thank you. Hasan, coming back to you. I want to talk about how small businesses can leverage their banking relationships in ways that maybe they're not beyond having like a checking account. So I think we could talk about what we mentioned before, which is that you are learning from all your other clients. So maybe you could talk about that, but then also more broadly about, you know, leveraging your banking relationship and actually having a relationship with your bank beyond your checking account.
Yeah, that's a really good question. So I'm actually going to touch on both what Sarah said as well as what Stephanie said. The important piece is about learning from each other. So being at JP Morgan Chase, we are, you know, coast to coast. We are one of the first banks that are going to be in the 48 contiguous states. So the benefit of working with such a bank is that you're going to see what maybe a business owner similar to you in your industry, similar employee base, similar revenue size is doing maybe in Michigan. And what's working in Michigan may not work in Washington, D.C., but I can tell you there's going to be similarities that you can learn from each other and maybe avoid a pitfall. And your banker becomes that central, you know, quarterback for you because we're looking at national data. So if there's an issue that we are seeing or a strength that we're seeing on the West Coast, we can get ahead of it and tell you that these are the learnings that we've seen from other clients. So let's talk to your CPA. Let's talk to your business consultant. Let's talk to your, you know, CFO maybe, and craft a strength around that. So that's very important. The other important piece is, as a small business, you have to be agile. And if anything that we can learn from this pandemic is technology. There's so many things that you can try without really investing a lot of money, to your question, you know, and take that chance. You know, you could do a crowdsourcing with a very small budget, right? You can go on a social media platform and try something out. And if it works, fantastic. Then you build on top of it. And now maybe you invest some dollars. But if it doesn't work and you don't see what you're really looking for, you toss it away and you try something else again. So you cannot be scared of trying new things because experience is built that way. When you have experience, you can make a better decision. The first time you tried something may not have worked, but now you're building on it. So having that relationship and having that trusted advisor is extremely important. The other thing is knowing, you know, how to like automate your banking and your other relationships. You're busy running your business. You're working day and night to make that business successful. You don't have time to write checks. You don't have time to, you know, worry about fraud. You don't have time to worry about like plain old simple banking. That's why you have bankers. That's why you have trusted advisors who can help you. I mean, I'm always surprised how many checks I see. Like, I mean, writing a check should be like using petty cash. That should be like your last resort. Most of your payments should be automated, whether it's going out or whether it's coming in, because then you don't have to worry about it. And if something goes wrong, there's an electronic paper trail to where you can quickly ask your banker or your bank to help you. So there's so many different avenues to take. The important part is to sit down with your financial advisor, your accountant, and really come up with a plan on how to audit your business.
Yeah, I love an electronic paper trail. That's funny.
Math doesn't lie.
So Sarah, coming back to you, you know, just tell us more. We're talking about building relationships, right? So people think about their accountant, you know, for tax season, and I don't think a lot of people think about their accountant to the point earlier until they have a problem. So talk just a little bit more about like how companies like yours form those relationships and what kinds of things you do for your clients that beyond helping them file their taxes.
Yeah, I shouldn't use the word stigma, but it almost is. So CPAs across the globe are really trying to get out of being historians, which is a really comfortable area for us all to have been for the last how many years, and really helping to be more forward thinking for our clients, because you're absolutely right. We're thought of for problems. We're thought of for IRS audits, or, it's tax time. We need to call our CPA or our accountants. But we have seen an incredible increase in those clients coming to us and us, reaching out to do projections and to help, to Stephanie's point, if you're going to try these new experiments or these new projects, you have to have, we advise, you don't have to have, but we advise you having a financial person kind of beside you to help you say, okay, what are our expectations and how long are we going to help let this run? One of the things that we see, I'm a 100% supporter of experiments and trying to see what works for your business, because we have to be agile. We have to be able, all of our clients have to. But what I see too often is people let those experiments run a little bit too long. And that's when it becomes incredibly difficult from a cash flow perspective, from the reserves perspective. They're not setting that expectation and really holding themselves to it. So one of the things that CPA firms and accountants are really doing is really being that trusted advisor, have those brainstorming sessions. So it's more like a fractional or an outsourced CFO than it is the historical tax accountant that you go to once a year. That's not our highest and best use for our clients or our relationships. We want to make sure that we are doing that perspective, not crystal ball. We're certainly not able to see the future, but we are able to help people plan a little bit more for the future. The other thing that I think we've seen a huge increase in across the industry is people outsourcing all different levels of the finance department. So you see businesses right now expanding, contracting relatively quickly, right? I mean, you might go from a 3-person accounting team to 1 or to none in some cases. And now it's a business owner trying to juggle things because they can't afford that salary and benefits or that full-time person. We've seen a huge increase in people coming and saying, I know I need expertise. I can't afford it. What can I do? Because you have a relationship with a firm or with a CPA, we are really good at kind of juggling time so you can get the expertise of a full-time person, but you don't need them for 40 hours a week or whatever that full-time, job is. It's called outsourced, it's called fractional, whatever it might be. But just make sure you're talking to those trusted advisors and those accountants because you can get the right blend of a team instead of trying to hire a CFO and a bookkeeper and an administrative person to try to help with some of your processes.
Yeah. Later, I'm going to ask you a question. I'm going to make a note about experiments going on for too long and how you know. But so think about an answer to that because I'm going to come back to that. So I'm Stephanie. Almost no one starts a business because they are great at running a business, right? They're great at something else. They're great at mistakes. They're great at wiring buildings. So what are we know you need to build a financial team around you. That's what we're talking about. What are the most important financial skills that a business owner has to have to at least know what they don't know and know what they need in building a financial team?
Yeah, and I love that. I love that question. And it kind of ties in to some of what Sarah was talking about too, which is this willingness, I call it self-awareness, honestly, but it's this willingness to recognize that here's what I know. And here's somebody who can help me at maybe the 50,000-foot strategic level so that I can start to decide which pieces I have to take care of myself and which pieces I can have other people do. Because I think one of the things that I see a lot of business owners do, because to Sarah's point, they think they can't afford to bring in outside help or whatever, they're like, well, I have to do everything. And the truth is, in finance, there's different areas, right? There's what I call financial strategy, which is really the domain of the CFO or a fractional CFO or a consultant. Then there's the bookkeeping, which is the historical piece of what happened and reporting. And then there's this sort of forward-looking plan. And the truth is, you don't have to do all three of those pieces yourself as a business owner. What you need to do is you need to just make sure they get done, and then that you can have the inputs from them so that you can make the right decisions. Because ultimately, as a business owner, your principal job is making sure that the company doesn't run out of cash and making sure that the company is achieving the goals that you set for yourself. And the rest of it's all about finding the right people to do those jobs. Does that make sense?
Yeah, definitely. I always think about how you hear famous people who are like, I was, really good at being a musician, but somebody stole all my money because I didn't know anything about managing my own money. And I think, that doesn't matter if you're not famous. I think for every business owner, you can get help, but you need to have the basic fundamental understanding of what your business, your finances need to look like. Hasan, I'm coming back to you in a second, but I just want to say to our audience that I do not see a lot of questions and I'm feeling a little disappointed. So if you guys could start putting some questions in the chat for this group, I am going to start asking them shortly. So Hasan, your favorite subject and mine, PPP loans. So the good news is we're not talking about applying for them anymore, although yesterday we learned from Neil Bradley that it's possible that they will reopen that. So we could be talking about applying for them again, but right now we're talking about PPP loan forgiveness. So I know you represent just one bank and you're not speaking for everyone, but could you just give some advice around documentation and the kinds of documents that businesses that received PPP loans should be preparing for applying for forgiveness?
Yeah, so PPP has been my day in and day out. So happy to talk about PPP, but it does bring some PTSD back. So said that, very important subject is nobody really knew that this pandemic would run for so long. So we started with a package, and the stimulus package has since changed many shades over. So some of the very important things to know is that if you've borrowed under $50,000, so $50,000 and under, the government has said that will be forgiven, but you still have to go through the process of filling out your forgiveness form. So for 50,000 and under, it's 3508 EZ form. So Edward Ziley form. Those forms require very little information, even though the questions may not seem very easy and straightforward, but the information is limited that they're requiring to look at that forgiveness plan. What you need to see and have it audited by your CPA or a trusted financial resource is, does it make sense? Have you used all of the money towards payroll? And if you haven't, then how much of that has been towards non-payroll? And be very particular about exactly how much has been spent on whatever, payroll versus non-payroll. That is the information you're gonna need under 50,000. I know the conversations are still open up to 150,000. We all hope the government can find a mutual ground to where up to $150,000 could be forgiven, but we don't know yet. Talk to your bankers. Your bankers are a resource for you. So are your accountants. Your CPAs are there to help you. If you have a complicated question, or maybe even a simple question, just pick up the phone. If the bankers don't know, they will divert you to the CPA. If the CPAs don't know, they'll divert you over to the banker. But in between a few of us, we can help you.
Great. Just a reminder to our audience, if you could mute. So thank you, Hasan. Sarah, coming back to you, and we're not done with PPP yet. There's a lot of confusion about it. So just, can you talk a little bit about how you're advising your clients on dealing with it? And also, just they have to choose between whether to apply in the 8-week window or the 24-week window. So could you just talk a little bit about that?
Yeah, so when we were first advising clients, because honestly, we haven't done tons of forgiveness applications at this point, because we've advised to hold off, specifically for those that are 150,000 or lower, because there's still so many question marks, and we don't want our clients to do a whole lot of work, pay a CPA, pay us or another firm, and then find out they didn't have to do that. That just seems fruitless. We did go through with clients related to the 8 or the 24 week. Many of the financial institutions made it relatively easy to request that flip up from 8 to 24. We absolutely recommended to clients that were ready to go. If they were ready at the 8 weeks, we had some clients that, it didn't matter what we advised them. They really just wanted this headache gone, and they wanted to apply for forgiveness. To be honest, some of them were a little bit disappointed because the system wasn't really ready to accept those applications, even though they had all of their I's dotted and T's crossed. So once the financial institution, and Hasan certainly correct me if Chase was different than some of the things that we saw, but even once the financial institutions started accepting those applications, they still, it's not something that, oh, we've got one, we're going to turn it around right now. They've got their 2 months to approve those forgiveness applications, and then the SBA still has 3 months to do their review and approval of those applications. There are still some questions out there. Specifically, I mentioned the 150 as was mentioned yesterday, if that's going to be blanket forgiven. The $50,000 was just last Friday or Thursday night, I think it was announced. So, we still see information trickle in. And then the other big one, which is the main reason that we're still, trying to work with clients, specifically cash basis tax on should you wait or hold off. You don't necessarily want that forgiveness in this calendar year because we're hopeful that there's going to be a change on the deductibility of those expenses that you're applying for forgiveness for. Right now, they're not deductible. So if you did receive forgiveness from the bank or the financial institution and the SBA before year end, as it stands today, those expenses aren't deductible. So your income's still going to shoot up and you'll be taxed on it, which wasn't the intent of the legislation. That's a personal opinion, not reflecting this panel or anything else, but I don't believe that was the intent of, the initial legislation. So that could change on December 24th for all we know, so we're really trying to advise clients to wait a little bit longer, push it all into next year. We can control and we can help plan from a tax perspective how to help you minimize your tax impact this year. And then everything forgiveness PPP related will just be pushed to 21.
Great, thank you. So I'm going to go to Stephanie with a non-PPP question, but Hasan, I just feel like you were nodding and listening, so I just wanted to give you a chance if there was anything related to what Sarah just said that you wanted to comment on.
No, absolutely. Sarah hit that on the head, that there's so many things that are turning and changing every day. So completely understand that majority of the business owners feel like, okay, I want to just get this over with. But there is a benefit of waiting a little bit until, a few weeks go by to where things have been firmed up a little bit more. It's just to Sarah's point, last Thursday, we announced 50,000. We're still talking about 150,000. So if you fall in that gray space, you could either benefit or maybe not, or miss out on something. So maybe take a little bit more time to really understand which way it's going. The other thing, not to put a shameless plug on JP Morgan Chase, but if you go to Chase Care Forgiveness website, so if you Google that, Chase Forgiveness website, there's a lot of FAQs that you could easily go put your, look for what is your scenario look like. And, we have bankers available. Even though if you did not do PPP through us, we're happy to help. It's a community thing. It's for our country. So wherever we can help, we'll be there to advise as much as we can.
I was just going to do the shameless plug for you because you told me earlier that you have assistance available even if people didn't get their loan through you, which I think is pretty remarkable. So Stephanie, no more PPP talk. A lot of people on this, probably most people listening right now, did not get a PPP loan. So let's talk about, you didn't get a PPP loan, but you need money. What kind of financing options are you talking to clients about?
So this is a question that I get a lot, right? And the thing I think you have to think through before you start thinking about, let me go talk to this investor over here, or let me apply for this grant program, or let me go to this pitch contest, because there's lots and lots of those opportunities. The first thing I really encourage founders to do is understand what they want their business to be. Because once you have clarity around what you want your business to be and how you expect it to grow, then you can start to look for the right partners. Because while there's all these different sources of money out there and there's all these different opportunities, you as an entrepreneur only have a certain amount of time to pursue each one of those. And the truth is, no matter which one of those you pursue, the chances are likely that you're going to get rejected more than you get accepted. So it takes a lot of time and energy to go through the process of trying to raise money. And you want to be sure that you're not scattered all over the place, right? You want to be sure that you're as focused on your best opportunity as possible. And so I like to say to people, all money is not created equal. You just need to find the money that's right for you. And so really the first thing I encourage people to do is not get caught up in, I saw this person in my community who raised $500,000 with angel money. I'm going to go get some angel money. I'm going to talk to those people and they're going to invest in me. I would say take some time to think through what it is that you really want your business to be, and then find the kind of money that corresponds to that. Does that make sense?
It does. That's very good advice. Thank you. Thank goodness we have some audience Q&A here, because I was going to have to start asking my backup questions. So we may get to those later. But Hasan, I'm coming to you with a question from Ben. And just a reminder to the audience, you can also hit that little raise your hand icon if you want to just ask on camera. So Ben says, Hasan, how is the best way to shift using or applying for credit accounts in your business name versus your personal credit line? So I think what he's getting at is, like, if you're operating as an individual person with your own credit, but now you've got a business or you're starting a business, how do you make that shift, and when should you make that shift?
Yeah, Ben, that's a really good question. So, take a few steps back. Think about when you were building your own credit personally. How many times did you have to apply for credit before you actually got declined? And then finally you got that first credit card, maybe it was a charge card, etc. So it's always better to start small. So if you are starting out on building your business credit, majority of the time, it's going to be a part of your own credit. So personal guarantees are what most credit card companies, lines of credit, SBA, whatever the product may be, from a credit standpoint, unless you're going to Stephanie's point and raising money, there is going to be some personal guarantee to it. And it's okay to mix that up a little bit, because you're giving your personal strength to help build your business. And that is very important, but it should be really under your business name. So if it's under your business name and the business tax ID, so very important that you have a tax ID registered to your business. If you do so, then it is open under your business and you are now the guarantor. So which that basically means everything is under your business. The only time it will show up on your personal credit is if you have defaulted. But if you continue to build, start with that one credit card, then have that second credit card, now you get a line of credit, term note, so forth and so on. The second part of that question is when, as soon as you can. Now, majority of the banks will tell you that you have to be in business for at least 2 to 3 years before you can apply for credit. That is absolutely right in mainstream banking, but there are credit card companies out there that will take a chance on you, maybe a small $500 business credit card to begin with, and that can be done in the first 12 months. So I would suggest the sooner you get a credit established for your business, the more avenue you have to pursue others. But majority of the time, senior lending banks or tier 1 banks will require you to be in business for at least 2 years. Hope that answered your question.
Yes, and it looks like Stephanie's going to add to that.
Yeah, I was just going to share that depending on the kind of business that you have, particularly if you're in the e-commerce space and you're generating a lot of sales and you're growing really rapidly, there are also some revenue-based financing options that might be available to you sooner than that sort of 2 to 3 year traditional lending period. And so if you are in that space, maybe comment and let me know, and I'm happy to share more details if it would be helpful. But there are other options for you.
Great, thank you. Sarah, I wanted to ask, excuse me, I'm sorry. Hasan mentioned credit cards in reference to personal finance. How do you advise your business clients, Sarah, on using credit cards for small business debt and spending?
So we recommend they use it like it's a note, right? So on their financial statements, if you will, they need to make sure they record it as a liability, as kind of a line of credit, not replace the line of credit, but oftentimes we just want to make sure that they're looking at it like that, because too often we see clients that aren't remembering there's that big liability out there and they're just paying that minimum fee. It's not a monthly expense like that. It is a liability that you need to make sure that you track. That answers
Anybody
your question.
else? Yes, thank you. Hasan or Stephanie, did you want to say anything about credit cards?
Yeah, I would add to what Sarah said. So make sure that, yeah, absolutely, you should use it more of a payable card, right? So you're using the card, you should pay it back at the end of the month. A credit card is not there for you to revolve that, and have debt on the credit card. Majority of us know where the interest rates are. Even as low as they are today, your credit card interest rate is always going to be on the high side. A traditional line of credit, which is utilized for revolving your short-term capital needs, those will allow you to carry a balance and you can pay a little bit less. But when it comes to credit cards, you want to use it, you want to pay it off as many times as you possibly can. Revolve that thing.
Okay.
And Jeanette, I just had a question for Hasan. Does that more conservative behavior of paying off your credit card debt frequently as opposed to just paying the minimum payment, does that have an impact on how the banks look at you and like, oh, okay, this person is responsible with their debt?
It's not as much how the business or the bank is looking at it, but it does add value. So there are small business credit reports out there. It's called SBFE score. That SBFE score will tell you the utilization of it. So when the bank is underwriting your request, they can see, okay, this particular person knows how to utilize, their availability of credit. So yes, it does play a role in it. Maybe not all of it, but definitely does. Yes. Good question. Thank you.
I'm excited now because we have a lot of questions coming in. So I think I'm going to throw these out and let you guys kind of just jump in based on which of you thinks you have an answer. So Jacqueline says, as an independent contractor, would you be opening an LLC at this time? Like, I think specifically she's asking, would that make accounting more or less complicated?
So I'm happy to take that. So if it's a single member LLC, it isn't going to have a huge impact. It's still going to flow right through to your personal return anyway. From an accounting perspective, whether or not you have an LLC or you're an independent contractor, we recommend you tracking all of those disbursements, all the revenue, your expenses separately anyway. Even if you're an independent contractor, if it's as simple as an Excel spreadsheet so that you know, if you don't have a separate bank account for your business activities, certainly if possible, we always recommend having a separate bank account because that just makes it very, very clear, helps with tax prep at the end of the year so that you don't have to go backwards and, bring in a box full of receipts or something like that.
Anybody else want to jump in on that one, Stephanie or Hasan?
I was just going to share, Jeanette, that if somebody is using an online accounting package and they're doing their own books, sometimes you can categorize those expenses in a way that make it easy for you to see them separately if you don't have that separate business banking account. Like QuickBooks allows you to categorize them, which can make it really easy.
Yep. And I think there's actually a lot of financial institutions now that are allowing you to tag those expenses also. But that's a great point. The other really important reason we were talking about projections and looking ahead to the future, as an independent contractor who maybe is thinking about what the next 6 months to a year looks like, you want to know what expenses you have been using so you can plan for the future. So there's lots of great reasons to make sure you're tracking those separately anyway.
But Hasan, I want to ask you a question specific to banks. Does the bank, from a bank's perspective, are you a small business if you're working as an independent contractor, but you're not an LLC, or do you need to be registered as an LLC or an S Corp or something to be recognized as a business by the bank?
Yes. So your second part of that question exactly, simplifies it. Are you a business or not at the end of the day? If you are a contractor, you are a contractor, not a business. But if you've registered your business, then you are a business. And, again, touching on this whole pandemic and the COVID and the stimulus, if you were a 1099 contractor, you know, and you had a business, you can apply for the stimulus package and get help by the federal government. But, you know, if you had no records of it, how do you actually show your payroll versus non-payroll costs and all of that? So you miss some of the stimulus packages, you know, years down to come. So both to Sarah and Stephanie's point, it is important. I mean, preference would be register your business, have a business checking account, so you can keep everything, you know, very, very separate from your personal life. But if that's too much and you still want to quantify in your personal banking, now, you know, majority of the banks will allow you to tag that, upload a receipt and say, okay, this was a business expense rather than a personal expense.
Just to clarify, Hasan, so if you're not registered as a business, it would limit the banking products that you have access to, right? I mean, the bank will not let you have a small business line of credit or whatever if you're not registered as a business.
But yes,
Yeah.
you could be a sole proprietor, so you could always be a DBA that,
Right.
you know, Hasan, Mannan, DBA, whatever business,
Yeah.
right? So you do have some access to it, but you're not going to have the overall capacity of
Yeah.
what a large business would have.
Okay, great. I want to move on to this next question from Antonia. And I love this question because I once, a long time ago, tried to register an LLC, and I had the same question and really struggled with this, finding the answer. And the question is, so how, after becoming an LLC, would you recommend getting an EIN, which is an employee identification number? And she asked, and this is the part that I thought was very confusing, is a tax ID number the same as an employee identification number? So can you clarify that? Anyone?
I'll jump in if nobody else wants to.
I was waiting on Sarah, so please.
I was waiting on Sarah too. But the answer is yes, you need one, and yes, they're the same thing. But let's let Sarah tell us more.
Yep, absolutely. I'm sorry, everybody was shaking their heads, so I didn't want to talk on all at the same time. So yes, absolutely. It really is a very, very easy process to get that employer identification number, but then it allows you a lot of different access for your financial institution, all sorts of things, any grant or government funding, at any programs through SBA, you're going to want to have that. If you start to have any payroll related things, you need that EIN also. It really is just a business's social security number, just the ID.
Just to clarify, the EIN is something that you get from the federal government, not from your state government, correct?
Mm-hmm. Correct. Yep.
Yeah, and most websites now where you register for your LLC or for a business name, automatically there's going to be a box right underneath that, apply for an EIN at the same time. So you don't even have to do like two different applications. It's pretty much on the same applications.
Yeah.
Routes it to the IRS. Yep.
That's great. So I think this is probably a question for Stephanie or Sarah, but maybe Hasan wants to weigh in. There might be a banking angle here, though, so I'll come to you, Hasan. This person asked, how important is it to own property as a small business, to own property as opposed to renting it? They said they've been renting for 13 years. So what are the financial implications of owning versus renting? And what's tax deductible? Is it considered an asset if you own versus whether you rent?
Well, and maybe I'll talk about the capital side, and then Sarah can tell us about the tax side. On the capital side, being a property owner does open up an avenue for a loan program. I think it's called 504. Check me if I'm wrong, Hasan. But there's an opportunity for you to actually get a loan based on the fact that you own property that's occupied by your business. So it could actually provide access to a capital source that you might not have otherwise. But other than that, owning a building in terms of the way that you operate your business could be really interesting also, because it means that you control, for example, the place that you produce your products or the place that you store your products. So I do think it can have some advantages on the capital raising side. But I'd love to hear Sarah's thoughts on the tax and accounting implications.
Yep, absolutely. Thank you very much, Stephanie. So obviously there's some cash flow things, right? So you're going to have to think about whether you want just a monthly payment, whether you want this mortgage or some debt related to this property when you buy it. And part of it is talking a little bit about what you think your future is. I've got a lot of clients right now that within the last 5 years, they went from renting to owning, and now they're stuck with this building, and 90% of their team members is virtual. So those are just non-tax related considerations. From a tax perspective, once you have this asset, and you own this building, it goes kind of on your balance sheet side. So you don't see all of the monthly outflows necessarily like you would. You see a reduction in your debt, your loan for the mortgage, and you also see if you have debt related to it, which a lot of companies don't just pay cash for a building or a piece of property. So from the expense side and the deductibility side, you would have interest related to that mortgage. You would also have depreciation related to the building. There's also a lot of tax benefits and taxable or tax deductions that you can use for repairs and maintenance on that building, that you might not have all of the same benefits as a lessor, or lessee rather. But I would definitely recommend, it's not that cut and dry. This is where you need to build your financial team, and you need to really look at all of the different considerations, because it is cash flow, it is tax, it is what's your future look like. It is, if you already have 2 locations, are you going to continue to expand? Do you want one to be headquarters with little pop-up places that are, other locations? There's just so many more things that go into it. I hate to answer that question. Obviously, I'm slightly wordy, but I hate to answer that question with too short of an answer, because there's just a lot to think about.
Hasan, thank you. I'm Sarah. Hasan, can you weigh in just from the bank's perspective about just how owning versus renting might affect your banking relationships and your financial, like your loan options and things like that?
Yeah, no, really good question. And I wouldn't say it really affects your banking relationship one way or the other, but what's available to you. And you almost have to sit down, take a pen and a paper, put a T and tell you why yes and why not of owning a building. Very much like buying a house, right? If you want to rent a place and pay rent and not worry about all of the maintenance and the overhead, then that's your prerogative. Whereas on the flip side of it, if you want to own a building, you're already paying rent. So the question is, how much rent are you paying per month, and how much can you afford if you were to buy? Same exact rent. So hypothetically speaking, it was $10,000 a month. With $10,000 a payment, which includes your principal interest plus any other overheads like insurance and everything else, can I buy a $500,000 property? Then that becomes your buying power, right? That you now know that I can afford a building for $500,000. Now, depending on what part of this, country you're in, property is different. Instead of having, an office and a warehouse, now you may have everything under one umbrella. So it may be really good for you. And over time, this asset will appreciate. Hopefully, in the United States, we've seen majority of the time it appreciates. Does it appreciate as much as, something else? Yes, maybe correct, maybe not, but it will appreciate at some point. And now you can leverage that. Now you can leverage that, building. You can refinance, take equity out, reinvest it towards your business, or you can sell it, take the principal, go buy something else. So there's so many different options once you have an asset. On the flip side of it, what programs are available? There's a lot of programs by the state, by the federal government. Stephanie mentioned 504, 7A, other, programs from the local governments are available if you're buying in a depressed area versus none. So there's so many avenues that you can really go under. It really, what are you more comfortable with?
Great. Okay. So we have a couple more questions and I want to try to squeeze them in before we run out of time. I love this question because no one will ever answer this question, but I'm hoping we can trick you guys into, hope we've worn you down enough that we'll trick you into just giving this, I think it's Magali, I'm not sure how to pronounce her name, but an answer to this question. What is a good annual or quarterly percentage growth for a business? I am trying to determine goals for my executive team, bonuses based on growth. So first, I think we can all agree that any growth at this point is a major win. But, small business owners operate really in a silo and they don't know what is reasonable. Is 10% growth phenomenal? Is it average? Do you guys have just any insights into that?
Yes, so Mary Margaret, I'll take a stab at it because every growth is different. There are peer group averages that you can actually look at. So it's very important to understand what industry are you in. Not all industries will grow at the same pace. A 10% growth in automobile may be great. 10% growth in soda and beverage manufacturing may not be so great, right? So you just can't, there is no apples to apples comparison. So it's very important to understand what industry you're in. And then you can look at the industry data. that this particular industry nationally grows this much, locally it grows this much.
She's
they
in
even break it down to
healthcare.
the count row. I'm
Just
sorry?
letting you know, she just answered that she's in the healthcare industry. So now you can really give her a specific answer.
Yeah, again, healthcare is very broad, right? What kind of healthcare? Are you in dental practice? Are you in general physician? Are you in specialization? So even, believe it or not, those particular segments can waive differently depending on, you know, where you are and what you're doing.
We want to hear a number. Give us a number. You won't do it.
I could look for one, but it wouldn't be accurate, right? Because I'm going to lead you down a path that's not going to be completely accurate. But I'll leave it to Sarah and Stephanie if you guys want to.
Well, maybe you guys could
mention a
give
number.
advice on. Can you give advice on how she can find that information for her industry? I think that's more useful advice to everyone. Like, where can she go to get that information? Anyone, Stephanie, Sarah, anyone who wants to answer.
Well, my one thought was that we also want to be clear about what we're talking about in terms of growth.
Yeah.
Right? Because there's a difference between revenue growth, which just means you sold more, and either operating margin or net profit growth, which is how much more money you kept. And so the one thing I would suggest, and I'm not going to give you a number either, sorry, but the one thing I would suggest is think about, as you're looking at this for bonuses, I would think about what activities you want your team to be measured by, right? So like if your sales team needs to grow top line revenue, then focus on that. However, if some of your other teams, like your operations team or your product development team, needs to cut costs, then, you know, have their goals aligned, their growth or their reduction rate, with what you actually want them to do. Because I think you can kind of lead people in the wrong direction by just saying, well, our goal is 5% growth in profits, and everybody has trouble understanding how that connects with what they're doing every day. And so it doesn't actually help you.
Right. Sarah's going to weigh in here.
Thank you. I raised my hand just so, yes, thank you.
I love the hand, yeah.
Just a couple of comments. So I absolutely agree. You have to look at what your historical results are and where you want to be. We always say when you're planning these sorts of things and you're looking at bonuses and percentage growth, you need to know where you've been and where you want to go. So you start with strategic planning and looking at that. The other great resource, I'm a huge advocate for associations. So every industry has a trade association of some sort. Medical Group Management Association, MGMA, has some phenomenal, and there's lots of others too, so I'm not affiliated with them, and I'm not really giving them a plug, but they do a great job just gathering data from all kind of sub niches within the healthcare industry on things like growth, on salaries, on operational costs, on all sorts of trends. And it doesn't matter what industry you're in, those sorts of resources from your trade association are great, because then you can benchmark yourself by region, by your specific subset of company type.
Great.
Yeah, and if you really want to be more competitive, your small business administration, so your local office, will keep data particularly to the state and the city, so you could actually compare exactly what's happening in your backyard.
Yeah, and I have to put in a plug for the Chambers of Commerce, because your local chamber is a place, you know, of course, where you can meet other people in business in your area, which is very useful, because obviously business is different based on region. I'm going to try to get one more question in here. I think, Hasan, this is for you. So I'm going to ask this specific question and then a broader question. This person says, will the owner of the business having life insurance look better on a loan application? So answer that. And then also, just if you're planning on applying for a loan, just kind of other than that, what kinds of things help just document that you might help you get the loan?
Yeah, so that's a really good question. And life insurance, again, it's important, right? Because that tells you that you're thinking about what's going to happen to your business after you. Nobody ever wants to say after you, but you are thinking about it. So that's great. So from a planning standpoint, from an exit strategy standpoint, that makes a lot of sense. So it's important to have life insurance. The question, whether it helps you from a banking standpoint or not, it really depends on the cash surrender value of your life insurance. That's basically saying that over a period of time, it's like a savings account. A lot of life insurance providers will provide you with that aspect of life insurance, to where every year a percentage of that is invested for you. And that becomes how much can you actually either borrow or cash in if you were to terminate your life insurance. That can be collateral, and majority of the time, SBA 7A products will actually require you to have a life insurance. So, that kind of answers that two-part. You can have life insurance, but if you have a cash surrender value, that's what will benefit you. Now, Mary Margaret, what was the second question to that, or second part to that?
The second question just is more broadly, what documents should they be prepared, people be prepared to have? And you have a couple minutes to answer, but just when they're applying for a small business loan.
Yeah, so the standard requirements are very simple, right? 3 years of business tax returns, 3 years of personal tax returns. Are you a cash-based accounting versus an accrual-based accounting? And Sarah can definitely tell you which one is more important for your business, and then ultimately what your goal is. So planning around that. But from a documentation standpoint, those are probably the two most important documents, and then the personal financial statement. The personal financial statement kind of tells the bank, where are you personally? Like, how much cash do you have? How much assets do you have? How much liabilities do you have? It's a snapshot of your financial health, but personally, because the tax returns and the balance sheet and the income statement in your business would allow us to get a snapshot of you business-wise, but then you have that personal-wise. And now we're looking at two together and seeing, okay, is there enough strength for us to be able to take a risk on your business as well as yourself individually? And if that risk weighs higher, then of course it becomes a difficult loan to approve. But if that risk is tolerant and we can risk adverse you from your business and your personal decisions, then it's a much better loan to do. Now, other things come into play like collateral and all of that. But from a documentation standpoint, it's really those 4 items: your business tax returns, your personal tax returns, your personal financial statements, and then your interims, how you're doing that particular year if you haven't filed your tax returns.
Great, thank you. So we're just at 3 o'clock, but I want to give Sarah and Stephanie like 10 seconds each to just give any advice they would like to give to someone applying for a small business loan, just in terms of preparing those documents in the future. Does Sarah or Stephanie, either one of you, want to add anything?
Sure. My advice would be don't be afraid to ask for help. So I think that financial institutions, accountants, we know that you mentioned earlier, Jeanette, you're great at, baking cupcakes or building a machine or putting a computer together, whatever that might be. Finance isn't your forte. Ask for help. Build that financial team around you so that we can help you put that balance sheet and those pro formas together.
Thank you. And Stephanie, you get the last word.
Oh, thank you. I would say that everything that Hasan and Sarah have shared is super important, but I just want to come back to this concept of also thinking about what you want your business to be and understanding who the right partner is. And that could look like actually having a business plan so that you understand, hey, I'm going to partner with this bank because they have the strength to support me as I start to grow my business. Or it could mean that you decide to partner with a local or regional bank. You just need to make sure that it's a fit for you. And that's all about getting clarity around what you want your business to be and who the right partner is.
Great.
And
thank
Mary
you so
Margaret,
much.
can I add one more thing?
Yes.
I feel like this could be helpful.
Okay.
JP Morgan Chase is launching a new business called Serving the Underserved. Basically, that means that if you haven't had the ability to sit down and really talk to somebody, now the underserved division that's their core focus. Their focus is not to make sure you're banking with us, but just giving you information. So it's called the Underserved Business. It's a brand new business that we're just now launching. It will be national. So take a look at it. It might actually give you a lot of those gaps that you're trying to fill.
Thank you so much. I am going to wrap it up by saying thank you to all 3 of you. Thank you to our audience. Thanks for staying just a little bit late. Don't forget, tomorrow we're switching things up a little bit, and our breakout sessions will start at noon and go to 1 p.m. Eastern. And thank you all so much. And it's been our pleasure to bring this panel to you in the big week for small business. Take care, everyone. Thank you. Bye-bye.
Thank you.
Bye. Thanks, guys.
Thank you all.